I would like to introduce the moderator, Chris Edgerton Warburton, who goes by the name of Edge, which is easier. And Chris has a long career in finance. He was at Goldman Sachs, heading the European desk there, working for many years on middle and lower income countries. He has worked very closely with the previously scheduled moderator, Chris Canavan, and with George Soros on developing financing solutions for Jordan in particular, and elsewhere in the Middle East. And he also heads up his own finance advisory firm. So Edge, you have the floor, and I will also just flag that we've had a couple of last-minute switches, including the unfortunate cancellation of Minister Fakouri. But I think there's a lot of intelligence about Jordan here that we hopefully will be able to compensate for that. Edge, over to you.
So Gregory, thank you very much, and it's a great pleasure and an honor to be here with you. I know that the themes today have been more broad about the overall humanitarian crisis, and we've avoided being terribly sort of country specific. However, as I think that this panel was going to have quite a strong Jordan theme, I hope that people will forgive us if we stick with that plan, as it were, despite the fact that His Excellency sadly has been called away. It's when you get an email saying, "My king has just ordered me to be elsewhere," you realize at that point, as they would say, off with his head. There isn't, it's a hard one to turn around and say, "Come on, Imad, you can do this for us." So I'm delighted to be here, and I equally feel, as Gregory said, that I'm sitting in some very scarily large boots, given that Chris Canavan was going to be here from the Soros Fund, and particularly given Mr. Soros's incredible announcement this morning. And if you haven't seen his letter in the Wall Street Journal, I would strongly recommend you to look at page A15, in which he sets out his plan for a $500 million investment into the private sector. And I think that's really why we're here. That's the cause of this panel. And as somebody who, as Gregory said, has spent his career working with governments in Europe and in the sort of European time zone through the developing world, which everything from Cape Town upwards, has led me to spend a lot of time looking at this challenge of how does one suddenly get the private sector to swing into action. I was struck by a lot of the comments earlier this morning saying, well, governments can only do so much, the private sector must come to the fore. But the private sector is I don't want to say is a fickle thing. The private sector is firstly, when we talk about the private sector, there's this sort of assumption, is one talking about the domestic private sector, or is one talking about the international private sector? And I'd like to posit that actually we don't need both, we actually need them together. We need the international private sector to work with the Jordanian private sector if you're really going to get a successful partnership. But secondly, it's very simple. They have a fiduciary responsibility, and they want to make profits. So if you can invest your money anywhere in the world, then the first place you look is not necessarily somewhere that is sitting in a conflict zone, that is which has a number of geographic and humanitarian challenges. There's plenty of other places you can go. So I think that what I want to discuss here and explore is really how do we, recognizing that private sector is a little flame, as it were, that almost shouldn't be here. I mean, has 75 reasons why you would not put Jordan on your list. And yet we're all saying it's critically important that they come to the party and they play. How can we work with them to encourage them to invest and to and to be part of to join the party. So I'm, as ever, when you get put on these panels, you're just completely shocked by you get put in awe with the people that you're with, and all of whom have significantly more experience than me. So I'm delighted to introduce Alejandro Litovsky, who manages the Earth Security Group, and has developed not only a color plan for the region, which is, as they say, turning up is 50%, but turning up with a plan is even, that gets you, that's more. So delighted to have Alejandro here, and it'd be great if you could just frame for us in your perspective, what Jordan has, what's it lacking, and what do you think is the opportunity that then the rest of us could try and support.
Thank you, Chris. Hello, everyone. Delighted to be here. I mean, let me just start in a different place rather than the private sector. We've done an analysis, and I think the important thing to say as a first conclusion is we really see the security of Jordan's resources, or in other words, the depletion of Jordan's resources as one of the most important factors really undermining the security, regional security, and stability and the social cohesion that is needed to support many of the things that we're talking about. Now, therefore, for us, the perspective of private sector investments is really how do we identify those investment areas that can address the issue of forced displacement, but while building the resilience of a host country to basically cope with these resource pressures. Yeah? There is, just to give you an example, there is every year 50,000 young people entering the job market in Jordan, and very few of them will actually find a job because the economy just can't create jobs fast enough. And so what is really important, I think, from our perspective is to really focus on those models, investment models that will encourage entrepreneurship, small, medium enterprises, and so on, to really create that fabric that can create those jobs. And can create win-win situations with host communities. It's not just about creating jobs for refugees or migrants, but it's actually having a bit of more of an holistic perspective. Before I go further, I want to say really pleased to be here, and today we're launching this report that Chris was mentioning. We've done together with the Swiss Agency for Development and Cooperation. And I have a pile here, so after the session, do feel free to come up and take a copy. And one of the things you'll see is one of the visuals we've produced for Jordan, and what are those critical resource pressures that we think are really fundamental to address, and where the private sector strategy needs to be focused on. And let me just perhaps give 3 very quick examples. Yeah? The first is water stress. And I see a lot of people nodding. This is really fundamental. This is really a security issue. And think about this. By 2030, roughly half of Jordan's water will be gone. Think about, we talk about 2030 in terms of the SDGs. Well, in 15 years, Jordan will have half of the water it has today, while the demand is rising. And by current estimates, by 2060, Jordan will not have any more water. 2060. So think about what is happening today with the pressure from people that are being forcibly displaced into Jordan, the growth in demand, the growth in pressure, while the country is essentially running out of water. Right? This is really a fundamental issue. Now, you turn that on the opportunity side and what that means from a private sector perspective, a strategic perspective, and you see, the biggest sectorial industry sector that is driving the demand is agriculture, for more than 70% of water demand. It's a sector that is very inefficient. The crops are very water intensive. They're not necessarily building economic value for local communities, very export driven. And we've spotted one particular technology, which is hydroponic agriculture, that has enormous potential to create efficiency, to create more productivity, more crops. It doesn't use land, which is being degraded very rapidly. And examples exist. You have farms in the valley that are pioneering that. There's a Palestinian entrepreneur that has shown that this is possible to be used, but it's not scaling. Why? Because the financial sector is not tuned into the opportunity. because the supply is not aggregated enough. If you want to set up a farm, you have to buy 35 different parts separately. And so you begin to see how the market is just not fully there. And this is where we actually see the opportunity, not just for investors to invest in this technology, but also where international agencies, where foundations need to step in and use catalytic funding to try to support that solution. If that happens, then there will be an enormous market opportunity for a solution and an investment space that is actually addressing one of Jordan's key pressure points. Very quickly, two of the other issues that we're seeing. The second is energy. And this is very important. Jordan is importing 97% of the energy it uses, oil and gas from neighboring countries, at 20% of its GDP. Yeah? And most of the growth of Jordan's debt is essentially geared by the need to subsidize electricity. Yeah? And so donors already know that, and one of the things that we found in the Jordan's response plan is the awareness that that energy has the power to derail Jordan's development trajectory entirely. Right? So there you go. Energy is a critical issue. How do you then get the private sector to invest in an alternative? And anyone that knows anything about Jordan's energy matrix, you will know that the big plans at the moment are nuclear and a number of other technologies that are very water intensive. This is obviously not the way to go. And so Jordan has a lot of sun. It has very big solar projects, big solar farms. It's one of the poster childs for solar investments in the Middle East. But these are very large projects funded by the EBRD and a number of other players. While the centralized small-scale solar, household solar, the solar energy that can produce thousands of jobs for migrants, refugees, and local young people is just not really scaling. Right? And we've talked to some of these companies, and why is it not scaling? We're not getting credit. The banks don't fully understand the opportunity. They don't really understand how to lend to SMEs. I think 80%, 90% of lending is going to the biggest, the top biggest companies in Jordan. So there's a lot of work to do. There's an enormous investment opportunity, but that is not fully there because there's a few sort of pieces missing. And this is where donors, where foundations, and where a number of perhaps local banks can begin to plug that gap. And we've made the proposals in quite a lot of detail, actually how this can be done and how we can bring these actors together. And the third issue is really around the booming cities. Yeah? This morning, we've heard, I think it's been a mixed message. Some people have been talking about refugees as if these were all inside camps, right? And this is actually a very small percentage. In Jordan, most of the refugees are basically living in cities, right? And cities are really booming. We have a picture here in the report of Amman, and it's just quite a reality check. Yeah? They're booming in ways that are quite out of control. The housing sector is a big driver of energy demand, and it's just unsustainable. It's unsustainable. Yeah? And so one of the things that we're saying is we need a better housing strategy, but we need to move to a sustainable housing strategy. Right? And this is where we identified roles for companies like IKEA that was here before, IKEA Foundation. They're doing great stuff, but they, companies that have the expertise and know-how that is related to the housing sector, planning, architecture firms, the Arabs, the big engineering firms of the world, they have a great role to play to really support the Urban Development Corporation of Jordan to begin to create a plan that needs to be upgraded, that really is looking at investments in housing, but that does that with a green growth mentality, because otherwise it's not sustainable for these cities to grow in this way. And rental prices is really, with competition for jobs, I would say, is the top second issue that is threatening social cohesion. Yeah? Prices in many of the cities in Jordan have gone up 300% because of the influx and demand for housing.
Alex, I think we might have to just pause.
Yes, I'll pause there. And there's a few key messages, but you can read it for yourself. Please pick up a copy. We're delighted to be here and to be able to launch this report here today with all of you. Thank you.
Thank you very much. If I could now turn to my right, to Farid Balaj, who's the director for the MENA region at the bank. Farid, when I look at the challenges that Jordan faces, it feels like they're being pulled in three directions. You have, domestically, the the population, in a way, sort of voting today. You have the sort of always the bad guy in the room, being the IMF, telling them you can't do this and you have to be very well disciplined. And then you have the bank, which has its development agenda and trying to see Jordan succeed and grow. And it seems to me you sit in the middle of that three-way tangle. Tell us a little bit about how you square that and how you see the role of the bank in helping Jordan through these critical times.
Yes, thank you very much, Chris, and thank you for the invitation. Let me start by saying that when the refugee crisis, when the Syria crisis started, 2011, many of us thought that it would be, kind of a short to medium term affair. And the first response from the international community was a humanitarian response, as usual and as it should be. The bank was looking at what was happening. We are not a humanitarian agency. We were kind of starting to look at the economic impact on the country, whether it is Jordan or Lebanon, by the way. And that was that. But that lasted very, very a short period of time. After 3, 4, 5 months, we started understanding that this is not passing. And we saw it happening in Lebanon first, very, very heavy, and then in Jordan. And we started talking to UNHCR, to our good friend Antonio Gutierrez, and we came up with this concept of the continuum between humanitarian and development. The issue in Jordan today, as it was 3 years ago, and the issue in Lebanon today, even more, as it was 3 years ago, is a development issue. It is no longer a humanitarian issue. It is no longer a resilience issue. And what we also determined is that Jordan and Lebanon are frankly putting and giving to the world a global public good, because they are helping the world manage a crisis of unprecedented scale. And what's happening is that the world is making Jordan and Lebanon pay for that global public good that they are offering us. And this was, the one of those number of starting points for us to look very, very seriously at the situation, and start to have an assessment of the impact of the Syria crisis on Lebanon and Jordan. I know we are talking about Jordan today, but just to give you a number when it comes to Lebanon, 2011, 12, and 13, the economy of Lebanon suffered something around $7.6 billion in loss because of the Syria crisis. $7.6 billion. It is huge. What did we get from the international community? After 3 years of really, really pushing, $75 million in grant. That's what the reality is, and this led us to look at another way of engaging. And we created something that is being launched as we speak by President Obama, and tomorrow we'll have a discussion about it at the UN, the concessional financing facility. We put together a new scheme that would allow for Jordan and Lebanon to tap into very concessional financing possibilities and resources. And this is happening, and this is kind of working, and this is also causing a lot of issues with our good friends from the IMF and with the Jordanians, obviously. Because the IMF is telling us, look, Jordan is already flirting with 90% debt to GDP. What are you guys doing lending the country money? Even if you are lending it at 0%, one day they will have to repay it. And even if that one day is in 35 years, still, this is in their, on their books. So the point we are still making it, and actually we were meeting with the king this morning, is that the reality is what it is. The availability of free resources is what it is. So what we are doing is trying to find the best solution. And the best solution is to help Jordan reprofile its debt. Over 20 years, the expensive debt of Jordan gets recycled in a way in much less expensive debt, much easier to manage, and that would allow for more breathing room on their debt to GDP ratio. Now, all this is fine as long as we talk about public money, but as I mentioned earlier, public money is finite and there is not enough to go around, particularly in a country that is having its own structural issues. Because frankly, whether it is Jordan or Lebanon, they didn't wait for the Syria crisis to be in trouble. They were, adult enough to get in trouble by themselves. So, and it's the issue that we are trying to push and manage with them. We need to get engaged with them on a deep, strong, far-reaching reform agenda. Alejandro, earlier you mentioned the issues of electricity and the fact that the subsidies are heavy. They are heavy. But as we speak, we are working with the Jordanians so that we get into a new dynamic of reform, and we are working with them on putting together a price management mechanism that would allow those subsidies to go down incrementally, and at the same time put together a safety net that would allow the poorest not to be negatively affected by this. At the same time, if we want to attract the private sector, we also need to help the Jordanians put their house back together when it comes to the investment climate. When one looks at the ranking of Jordan on the Doing Business Index, they are not doing good. They are actually doing quite bad. They are around 120 something. And for a country that is supposed to be attracting investment, this is not good enough. So while we are moving ahead with the Jordanians on helping them attract public financing, helping them put together performing special economic zones that would allow for specific economic activities to be developed, in particular those who could, thanks to a recently finalized agreement with the EU, those activities that could actually find an outlet on the EU market. But at the same time, we need to have the Jordanians open up their environment, their investment environment, and streamline a number of processes that frankly have no reason to be still there today. Let me finish by a couple of issues, and again, going back to what Alejandro mentioned, electricity is an issue, water is another issue. Water is a tremendous negative asset for Jordan right now, unfortunately, because Jordan is one of the poorest countries in the world when it comes to water availability. We are working with the Jordanian government on a very old project, one would say even a biblical project, the Dead Red conveyor, that would allow for desalination and for the possibility down the stretch to revive, if I may say, the Dead Sea. This project is important because this project will also give some breathing room when it comes to the water scarcity that Jordan is suffering from. When one looks at next door, Lebanon, that is flush literally with water, but that water is so mismanaged that it makes it so that the country is suffering from drought and is suffering from, and the population of Lebanon is not getting the water that they should be getting. In a discussion with the Minister of Water from Jordan, he was telling me that if we could find a way to get water from Lebanon through a pipeline to come to Jordan, we would be solving the whole issue of water scarcity, and we would be instilling more peace in the region through water cooperation between Jordan, Lebanon, the Palestinians because of the Dead Red, and Israel. And this is something that hopefully one day, possibly not today, but one day we should be looking for, because this is really the key. The key to this region is broader regional economic integration. Thank you.
I think we have to say inshallah to that, but that would indeed be a fantastic day. If I might, we didn't have a chance to rehearse this because people came in a little bit at different times, but I wonder whether I could now turn to Rapti here, who represents the private sector side of the World Bank Group. Would you be able to just comment on how the IFC is working to complement this sort of public sector strategy, and do you see a private investment opportunity in the region at the moment?
Yes, thank you, and thank you for this opportunity to participate along with my World Bank colleague and Joel, who we have met with before. So we really do work in close partnership with the World Bank. Farid mentioned all the things that are being done on their side to address the policy framework and the investment climate issues that are really constraining the private sector in countries like Jordan and Lebanon and the rest of the region. IFC, which is the private sector arm, works also on the reform side through our advisory work, which is an arm of our along with the investment arm. But really what we try to do is bring in the private sector once the policy framework is in place. And to bring the confidence that a partner like IFC can go into these countries that are risky, high risk perception, and yet be able to be commercially sustainable, because we are like the Citibank of the world, but with a development mandate. So having said that, there was a reference to the energy work that has been done, and Jordan is indeed the poster child, and we are proud to say that IFC, along with EBRD and EIB and other donors, have been part of that real catalytic event that got the private sector in. We did the first wind farm, privately financed wind farm, Tafila wind farm in Jordan. We've been part of the solar package that has come through, and it's a momentum that started, and we're hoping that this will continue in the region as well. Egypt is starting it. We're hoping one day Lebanon will do the reforms necessary to get the private sector in. So that's one way that we are addressing not only just the private sector needs of the country and job creation, but also taking away the fiscal burden of a country like Jordan with the high debt levels that Farid quoted, where the private sector can come in, is willing to come in, to provide these services at much lower costs. I mean, the costs of production now on the renewable side is very, very low, and it's trickling to the consumers, and saving, very much needed scarce fiscal resources for the governments to be able to spend on humanitarian and the other social services and the real public goods. So that's one angle of what IFC does. Now with this new crisis that has taken place, we've been also looking at how the private sector that you're doing today can participate in this process. It's not something that is well known to the private sector in general. There's IKEA Foundation that has done this from more corporate social responsibility, but for IFC, we're trying to see how we can catalyze the private sector to say there is a need, a humanitarian need, but there's also a development need, and it can be commercially viable. And we are seeing this in a few examples where we have partnered with the entities. One is in Jordan. It's a vocational technical training institute called Luminous that has become the leading skills training organization for the private sector for Jordanians, but also now addressing the refugee crisis and opening up their doors to Syrian refugees. They're doing this in partnership with humanitarian agencies like the UNHCR and IRC, getting donor grants to subsidize and give scholarships to the Syrians. And it's a very committed CEO who sees, that this is a need. He's tapping into the donor resources, tapping into organizations like IFC and others to say, give us a fund so we can now expand. And he's trying to expand in one of the zones that's located close to the refugee camps to do kind of a center of excellence. And he's going to try to tap donor funding, and IFC is committed to support him in this process. So that's one example, and it's heartening to see that there are private entrepreneurs, not just to do it from a CSR perspective, but try to do it in a sensible way that's commercially viable. A second example is one from Lebanon, where there is a microfinance entity that has also been historically giving microfinance loans not just to host Lebanese communities, but also to refugees from Palestine that have been in the country for a long time, and now extending that to Syrians. So those are organizations. But again, there's a lot of donor funding and NGO support that is going on into these private entities. And what's clear is that the private sector can't do this without some concessionality, especially at the beginning, to kind of get the niche and then create a sustainable model. And I think that's what we're trying to promote, not just grant-based and humanitarian-based work and corporate social responsibility that the private sector can do, but also to see how it can be done in a meaningful and financially commercial way, like was mentioned by Mr. Soros this morning as well. Thank you.
You mentioned the word concessionality, and we heard about the concessional lending program that the bank has come from. I suppose it would be too cheeky to ask whether one day we might see some concessional financing from the IFC. But I won't ask you to answer that question.
The answer right now is no. We'll go to others to try to bring down the risk for us.
Excellent. If I might now turn to Joel Bell. Joel's is leading, as his card says, the Chimera Foundation for Ethics in Leadership, something which certainly we all need our leaders to show, both in Europe and elsewhere, as we try and steer through the political elements of what's going on in the Middle East. But it was a different part of Joel's life that I wondered whether we could tap into to today, where he worked in helping the Canadian government to, in a sense, privatize a number of assets that they'd incentivized the creation of to further the Canadian economy, some of which suffered from that classic of some misaligned incentives, and whether there are some lessons there to how the public sector can work with the private sector in a situation like the Middle East to encourage growth and development. Over to you, Joel.
Thank you, Edge, and thank you to the organizers for bringing us together for this kind of conversation. My involvement in this actually began with Michael Doyle and Alex Alenikov about a year ago now, or a little longer, and Alex Betts in some work I started in the foundation on this question, focused on what I thought was an absence of a discussion about the kind of things that the private sector could do. When I asked the question, who is taking responsibility for examining an area and determining what might be viable there as a starting point for the creation of investments and jobs, I couldn't find an institution that had that proactive responsibility. There were a lot of people in the mix that are available to help, responding to proposals. But I couldn't find a proactive agency whose motivational structure, whose mission, whose dedication is to beating the bushes to find the opportunities as a starting point. And that gap set me thinking about what might be needed institutionally and in policy terms. I think we all are in agreement that there's no real solution to the problems we're addressing without gainful employment for the populations affected, that we're not going to, through aid and philanthropy, create enough jobs to make a meaningful dent in the problem, and that we need to make it possible for these environments to be acceptable for the commercial investment decision-making, where the big dollars and the big job creation opportunities really exist. The problem in bringing that opportunity, that activity to these areas, which are difficult areas, is not a lack of capital. We have a surplus of capital that's producing low and negative interest rates. It's not a lack of viable opportunity in a raw sense of, is there a business you could carry out in these areas that would be economically viable? George Soros confirmed that this morning. I think Alejandro's work leads in the same direction. The problem isn't in the context. It's the contextual framework within which we're trying to draw capital, commercial capital, that is found to be unacceptable to that capital in any significant volume. And so I talked to a number of people who've tried to do things in this regard, have pulled funds together over the years, and tried to determine why they failed, why they stopped, because most of them did. And the first answer I was given was there was no deal flow. Where were the real opportunities? From which I take the conclusion that the first responsibility or the first capacity one has to create to address this issue of attracting commercial capital and employment to these areas is a proactive searching out of opportunities. The motivational structure of many of our institutions doesn't, the success rate is going to be low in many of these activities. There's a lot more credit given to doing deals than there is to beating the bushes on 100 deals and coming up with 5. We don't have institutions at the moment that accept that institutional motivation, that it's okay to look at 100 and come up with 5. You're judged by the deals you come up with. And so I think the first thing is a proactive taking of responsibility for creating the deal opportunity rather than responding to proposals. The second answer you get is that the risks are too high, that the risks in the context, not in the venture again, are beyond commercial tolerance levels. This is not the only place where that happens. In the strongest economies, in the strongest industries, in the strongest companies in those industries, we are faced constantly with the argument that the risks are too high for something the public interest requires and the governments accept the risk. I could give you chapter and verse of examples, but let me cite U.S. space and defense. I built a broadband network in Canada. Every element of technology in that network was a product of the space and defense spending. It was risk-free, cost-free, on cost-plus contracts to the developers, and they were then developing commercial derivatives and making money on it, or trying to. The risk they took was in the marketing of the commercial derivative. When the U.S. needed a large aircraft for troop carrying, they sponsored, paid for, a competitive bid by the 3 largest airframe manufacturers. One of them won. I was in the business at the time. It cost $1 billion, $1.5 billion a pop to design one of those planes. You had 3 major airframe manufacturers, the 747 for Boeing, the DC-10 for Douglas, the L-1011, which actually won for Lockheed, actually won the contract. And they looked at it and they said, now, gee, if we take out a few of the fuel tanks and put in some baggage compartments and put in a few extra doors so we can move a lot of people on and off the plane more efficiently, we've got a commercial product here for a large passenger carrying vehicle. And so you had 3 large planes launched at the same time that had cost the companies only the modifications for the commercial derivative. So we are well experienced in the developed world in accepting those risks. If we were to, and I could give you examples in Japan where robotization, when the industry was resistant to automation, said to the government, we won't do it. The government said, we'll buy the automating equipment, we'll buy the robots, we'll lease them to you on cancelable terms. You take them on, we'll take the risk. I could cite examples in Canada that were embarrassing. We created incentives that were so rich that on failure you made 3 to 7% on your money if you had any intelligence on how to structure the deal. So that there are European examples of that. NIH is another example of where government money picks up the risk for development of technology. If we were to apply to different risks and apply different techniques to the world, the developing world, the locations of the high numbers of migrants, and looked at a risk absorption strategy. Again, different risks, different techniques. But it might be that owning the plant, owning the equipment, owning the assets, and leasing them at a full fare, a full rate, to an entrepreneur, to a commercial company, cancelable on the happening of certain risks that interrupt the business. Or if we broaden some of what we cover in risk in the insurance field, we are experienced with risk insurance in political risk, that we might be able to de-risk the environment sufficiently that it becomes acceptable for commercial capital. Those de-risking instruments individually are very high risk. Pooled over multiple regions, multiple industries, multiple operators, may start to look like a junk bond and be refinanceable in the commercial capital markets, bringing in private sector capital even to the risk absorption in the second stage by securitization of that asset. The third answer you get, and it's been alluded to here, as to why commercial capital finds it hard to go in, is structural impediments, labor training, infrastructure, lack of financial services affecting mainly the local and regional players rather than the global players. And there, I think it is fair to say that we're still going to need some subsidy. I don't think that in most of the areas we're talking about that it's commercially ready. However, one of the things the bank talks about wanting to do, and you alluded to it, Fareed, is using its money in a way that its investments are used as a tool for the drawing of more commercial capital. Now, inherently, in the kind of mechanism I'm talking about, where you search out the opportunity, you piece together the requirements of success, you find a deficiency in, say, infrastructure, you can link those two and say the infrastructure will be built if the investment comes in. The investment needs that. You link the two. The investment agrees to come in with the infrastructure. The infrastructure agrees to come in with the investment in the ventures. And by doing that, you then create a consumer base, a user base, whose contract might be bankable. The ventures demand might be sufficient to move the line of demarcation between what is public money and what can be tolerated by commercial investors, which now have the opportunity to look at a committed contract from the ventures that are linked into this initiative as a revenue stream that can permit some private sector financing of the structural impediment removal as well. I won't go into the fourth one except to mention it because it's a more common and conundrum that needs further attention of transparency and pressure and perhaps withdrawal of opportunity if it's not complied with. But that's reliability, that's contract compliance, that's anti-corruption mechanisms, etc. We can talk about that if people wish. So what I'm calling for, in effect, is what I would have called in the days when I was young in this business, merchant banking. We seem to have forgotten that term, but the merchant banks were willing, they had capital base to invest for their own account, to help close deals, to give comfort to the other investors at the table. They took holistic responsibility for finding the deal, defining it, finding all the ingredients, finding the investors, finding the operators, doing the financing, and taking a piece as necessary to make the deal succeed. So a merchant bank dedicated to these zones and these objectives is what I think would be very helpful. It's not intended that it displace any of the existing players because they would in fact be looked to and be brought opportunities by the deal finding activity of the merchant bank. Maybe we have a place for George Soros, some of George Soros's 500 million here. I think that, let me just close with a more global comment. I think the world is ready to understand that what is going on now is actually bad for business. And maybe business is ready to understand that message as well. We have a glut of savings in the developed world. We have CEOs who don't get their enjoyment out of doing what they're doing, using that surplus cash not for investment, but for increasing dividends and buyback of shares in order to prop up their share value in the market. They're spiraling down rather than up. If we could shift some of that low-yielding savings to high-yielding opportunities in these areas that are starved of investment, we could stimulate global growth to the benefit of the developed world by exports and by investment opportunity. Clearly, we would benefit the developing world by the economic stimulus in that area and have the externality benefit of a more stable environment in the areas of large numbers of migrants. Let me stop there.
Fantastic, Joel, and it would be inappropriate, but I'd love to give you a hug about the idea of creating an investment bank as an investment banker myself. It's not often that we get called for our services. You mentioned that you'd been in discussion with this with Alex, and I wondered if Alex wanted to. We're very short of time, but if Alex just wanted to chip in into the conversation.
I mean, I think it's worth recognizing that nearly 60% of the world's refugees are in just 10 host countries, and they're repeat hosts. Jordan is one of those. It claims to have 1.3 million refugees on its territory. Relative to population size, that's enormous. The key to making refugee hosting win-win is jobs. Jobs are the missing piece. And that's both to provide autonomy, which is what the second half of the Refugee Convention should be about for refugees, but it's also very much in the interest of the host state if it can tie into their national development plan, if it can create jobs for host nationals, citizens, alongside refugees, and if it can contribute to enhancing the human capital of refugees so that when they go back, they can effectively be part of the post-conflict reconstruction. You can incubate them to contribute. The Special Economic Zone pilot has the potential, if it works, to be scaled to other areas. But I think we're realizing that creating jobs is very hard. That in a context like Jordan, one could formalize informal labor, but that doesn't get you very far in real terms. You could replace Jordanian nationals with refugees, but that's politically untenable. You could replace other migrant workers with refugees, but again, politically untenable. So you need new investment, and that's got to come from somewhere. And appealing to business to engage with creating jobs for refugees, the CSR incentives are obvious, but they'll only get you so far. They're a hook. It's the core business appeal that we've got to get right. What are the incentive structures? Now, the EU trade carve-out in garments is getting some of the way, but doesn't seem to get us all of the way. Infrastructure investment and concessionary finance to make it a viable investment proposition becomes very important. But still, I think there needs to be a plan to solve a collective action problem. This is a multi-stakeholder initiative. It requires the government regulation, the incentives, the international financial organizations to come together to create an environment in which business will invest to create those new jobs. And to achieve that, I think there are certain things that need to happen to create that multi-stakeholder environment. For instance, we tend to have a lot of meetings like this in places like New York that bring business together with the public sector. We need them at the field level. Why not have a meeting like this in Amman, Jordan, on refugees and business, so business can understand the context, business can see the refugee camps, business can realize the CSR case, but think through the long-term core business case for engagement. So really exciting, but I think we shouldn't underestimate how hard it is to create jobs and how this kind of multi-stakeholder engagement and the innovative ideas we've heard are central to pulling it off. Thank you.
Perfect. Thank you, Alex. And I think the work that you and Paul has done has been incredibly helpful in terms of framing some of these issues. I personally don't. I worry about the idea of creating these little enclaves and think of the region as a special economic zone, and think it's our collective responsibility to help them. Jobs is not just an issue that's being forced by the refugees. I think it's an issue that we've been seeing. the population growth in the region for a while. I'm told I have time for a couple of very quick questions or interventions. Is that if you want to put your, I think that Salim put his card up first, and then I have Gray here.
Thank you very much. My name is Salim Salame. I'm half Palestinian, half Syrian. I'm here with the delegation of colleagues in New York and Washington since a couple of days. I'm based in Sweden. I'm a political refugee in Sweden, and I advise Ban Ki-moon on Peace, Youth and Security, Resolution 2250. I think the esteemed panelists here covered a lot about the restrictions and the limitations that we have in host countries, and in this case, Jordan, critical resources, pressure, etc., etc. And this brings me to follow up on what Alex was mentioning about to what extent we can really create opportunities, to what extent we can really invest in those already strained countries. What if we can identify opportunities that can create opportunities for people at their very own homes? This is part of the message I've been carrying around in New York and in Washington, which is about thinking also beyond the borders of host countries and touching upon the elephant in the room that no policymaker is trying to touch upon, which is the protection of civilians inside Syria and the leverage the business sector and the private sector can have on this topic in order to create an environment suitable for investment, suitable for prosperity, and suitable for reconstruction, of course. As was pointed out rightly, it is no longer a humanitarian issue nor a resilient issue. It's a development issue. But I would challenge everybody and say that it is also a very political issue. And we need to start thinking about that, because I think we are all here today, you are all here today, powerful people with resources, because you are pushed by common good to find solutions for very persistent problems. And I think it's worth your time to consider thinking beyond the borders of host countries and to think of the core reason that brings us all here together today. Thank you.
Thank you. Thank you very much. Well said. If I could pass the
Yeah.
to Gary.
I'm Gary Kleiman. You mentioned the collective action problem. Often the private sector cannot act collectively to operationalize those ideas, and it's been a very keen source of frustration of mine the past year, and I have talked to some parties in the room. I've talked to Soros, I've talked to the World Bank, I've talked to others. I was a refugee officer in Southeast Asia 30 years ago, and since I've spent my career analyzing and developing emerging financial markets. All these countries in the hot zone in EMEA have very active capital markets with a lot of foreign investment. There is the mobilization available through those existing channels, whether it's Jordan, Lebanon, all the way through EMEA, Central and Eastern Europe, all the way through Sub-Saharan Africa, to develop refugee-specific alternatives, whether it's a sovereign bond, but if you don't want bonds, if you don't want to run up the debt, what about all the companies in Jordan listed on the stock exchange that are involved already in refugee infrastructure, in provision of services? They want to hire refugees. They want to establish a supply chain. Let's use those existing channels. I am proposing that we develop a multi-stakeholder task force. I think it can be intensively private sector bank and investor driven. We might need guarantees from international partners, but maybe not. And let's start to develop and prepare some pilot issues that are debt and equity oriented. You could raise billions of dollars this way. It's already being raised. Turkey has funded its entire government response through issuing bonds at home and abroad that are often bought by foreign investors. They spent up to $10 billion already. So let's try to develop some refugee-specific alternatives. I invite all you in the room to try to join this initial research effort. It's a nonprofit effort I'm trying to put together. We're just trying to get the seed money to maybe have some pilot issues into next year that can pay off 100, 1,000 times the initial investment. So I encourage you to go to the call to action. Contact me. I have written about this. It's been endorsed in the Financial Times and other press as well the past year. So thank you, but I wanted to offer some specific remedies and some hope at the same time.
Thank you very much. I think Farid wanted to make a... Okay. Very, 2 seconds.
I'm finished. No, just... yeah, sorry. A couple of points, and we'll finish by that. We heard a few mentions of, and particularly from you, Alex, this initiative that was launched with Paul Collier about a year ago, and then we had a discussion with the King and then Jim and Cameron actually last year, this time. We moved ahead on that particular idea. And on the 27th of September, in a couple of days, we are going to our board of directors with a project that would actually create, as a goal, 200,000 jobs for both refugees and Jordanians, obviously, for all the political reasons that you can get. But we are moving on that as World Bank and with the UK and others. And it is really to show that you can seize on a huge challenge and kind of transform it, I know it's a cliche, into some kind of an opportunity. It is there. So not only are we moving ahead on, on this special economic zones, on creating jobs, on trying to reform the job markets in Jordan so that it can absorb those refugees. But also, and what's very interesting about this whole discussion, and I'm finishing now?
Yes.
Is that peace in Syria tomorrow will be a huge driver for growth in Jordan and Lebanon. We can elaborate on that. We have done a lot of analysis on it. And I believe that the way it was in 1943 with the world starting to think about the post-war, we need to start thinking about what's going to happen in Syria in 2-3 years. We need to start thinking about it right now. And the opportunities are absolutely huge, and I'm happy to have another discussion, but not today, obviously, on that particular issue.
Thank you very much. So if I might close by saying I must be one of the few, I hope I'm not the only one, who wears both a biochemist's and a macroeconomic hat at this forum, and I'm splitting my time between what's going on the AMR, Ebola, and Jordanian issue. And I was struck by a meeting that just took place yesterday where Ban Ki-moon and Jim Kim were talking about the Ebola crisis, and they were saying, looking back at it, they came to a view of their review, and they said three key things. One, the cash didn't come in time. We couldn't spend it because the private sector wasn't there for us to work with. When it came, it was inflexible, and people told us how to spend the money. And what came was incredibly scattershot. And they finished by saying, this should never happen again. Let's come together to resolve it. Please let us not get to a situation with the Middle East where we come and we say those 4 statements, which in truth we all know are happening here today. Let us not be in a situation where we have to say it should never happen again. The red lights are flashing, and if you don't get it, I'll send you all to an AMR meeting. It's our responsibility to work with the host countries to build them and to create prosperity for the refugees and for the people of the region. Thank you very much for joining us today.